All right, so we've got a stack of tech stock articles here.
Yeah.
And it feels like every analyst and their cousin has an opinion on where the market's going.
It's a lot to wade through.
It really is. But that's what we're here for, right? To cut through the noise and find those golden nuggets of insight.
Exactly. We're going to dig into these articles, see what they're really saying, and figure out what that means for you as an investor.
Love it. And from what I'm seeing, we've got a good mix here.
Oh, yeah.
Some articles are laser focused on those short-term plays, the ones promising those sky-high returns in the blink of an eye.
The get-rich-quick schemes.
Well, not schemes exactly, but you get the idea.
High risk, high reward.
Exactly. But then we've also got some articles looking at the companies playing the long game, building those economic moats that Warren Buffett always talks about.
The company's built to last.
Exactly. So you're ready to separate the flash in the pan from the real deal.
Let's do it.
All right. Let's start with those short-term players, the ones making headlines with those honestly kind of crazy year-over-year returns.
Gotta love a good growth spurt.
Right. I mean, take NVIDIA, for example, clocking in at a whopping 127% gain.
Wow.
Right. They're the masterminds behind the AI chips and AI as well.
It's the thing right now.
It's bigger than just a thing. It's like the entire tech world is riding the AI wave.
And NVIDIA's providing the surfboards.
Exactly. But it's not just about raw processing power. We've also got Broadcom sitting pretty at a 71% surge.
Solid.
Yeah, they're not just making chips, they're also developing the software that keeps everything running smoothly. A bit of a hedge,
Smart move. Diversification is key in this game.
Totally. And you know what else is key?
It's right.
Security, which is probably why CrowdStrike is absolutely crushing it with a 69% jump.
Cybersecurity, that's not going away anytime soon.
Unfortunately not. It's not just a tech concern anymore. It's a fact of life.
And the more connected we get, the more important cybersecurity becomes.
Exactly. It's almost like a dark horse scenario.
Right.
The world gets more complicated, more reliant on technology, and suddenly cybersecurity is a booming industry.
It's all about supply and demand.
And speaking of demand, you can't forget about the workhorses that are powering all this AI magic super microcomputer. They're up 64%.
They're making bank.
Because they're making the servers, the backbone of the data centers where all the processing happens.
Can't have AI without the hardware.
It's all connected, right? But here's the thing. It's easy to get caught up in the excitement of these numbers, 64%, 69%, over 100%. But before we all empty our bank accounts and dive headfirst into these stocks...
We need to talk about what year-over-year returns actually mean.
Right. What does that even mean?
It means we're looking at how much a stock's price has increased compared to this time last year.
So like a snapshot in time.
Exactly. A snapshot, not a guarantee of future riches.
So just because a stock is up big this year...
Doesn't mean it'll do the same next year.
Okay, so how do we make sense of these short-term players?
Well, it's all about understanding risk and your own personal risk tolerance.
Risk tolerance, that's a whole other can of worms.
It really is. But the key is to be aware of it. Are you comfortable with big swings in your portfolio? Or do you prefer things a bit more stable?
Yeah, that's a good question to ask yourself. And it's a perfect segue into those companies playing the long game.
The ones building those moats.
Exactly. We'll get into those right after this. Speaking of moats, let's dive into those companies that are really built to last.
The ones with that long-term vision.
Exactly. They're not just chasing the latest trend. They're building something that can withstand any storm.
It's like the difference between building a house on sand versus building it on solid rock.
Perfect analogy. And I'm seeing some familiar names popping up here.
Oh, yeah. Like who?
Well, Qualcomm, for one. They've really built a fortress around their wireless technology.
All pots, right.
Exactly. They've got a real competitive edge. And these articles are saying they're also in a prime position to capitalize on, you guessed it, AI.
They're not putting all their eggs in one basket.
Smart move. And then there's NXP Semiconductors. They've really piqued my interest.
What's caught your eye with them?
Well, for one thing, Morningstar seems to really like them.
Morningstar's a tough crowd to please. They really dig into a company's financials.
Exactly. So when they give a thumbs up, I pay attention. And it looks like they're bullish on NXP's exposure to the automotive chip market.
Smart move.
Yep.
Electric vehicles, autonomous vehicles, that whole sector is only going to grow.
It's the future of transportation. And speaking of the future, Lam Research is another Morningstar favorite.
They're all about the semiconductor manufacturing equipment.
So they're not making the chips themselves.
Nope, they're making the tools that make the chips.
Meta. I like it. And with the global chip shortage we've been seeing, I can only imagine the demand for their products is through the roof.
It's a good time to be in the business of making things that make chips.
No kidding. And then, of course, we have the 800-pound gorilla in the room,
Like
Microsoft.
the OG tech giant.
Right. They're so deeply embedded in everything we do with technology, from their cloud computing platform, Azure, to their software suite. They're practically a utility at this point.
They've done a fantastic job of transitioning from a product-based company to a subscription-based model.
Meaning that recurring revenue investors love that.
It's the gift that keeps on giving.
Mm.
And they've done a great job with their cloud services, really cemented themselves as a leader in that space.
It's that stickiness factor. Once you're in their ecosystem, you're pretty much hooked.
Exactly. And speaking of sticky and hat, we can't forget about Salesforce, the kings of customer relationship management, or CRM as the cool kids call it.
In today's world, data is king, and Salesforce helps companies manage all that customer data, make sense of it, and hopefully use it to improve their business.
They're the masters of turning data into insights and insights into action.
And they've done a great job of staying ahead of the curve, constantly innovating, expanding their offerings. That's the mark of a true moat builder, right?
Absolutely. They're not content to rest on their laurels. They're always looking for the next big thing.
It's that constant evolution that keeps the competition at bay. And look at that. NVIDIA's back in the mix, proving that their dominance in AI chips isn't just a fluke.
They're firing on all cylinders.
They've got the momentum, and then there's Broadcom with their diversified approach chips and software. They're well positioned to weather any storm.
They're the epitome of a well-rounded company.
But it's not just about patents and market share, right? These articles highlight some other crucial factors to consider when we're talking about long-term investments.
Absolutely. We need to talk about growth, potential financials management teams, the whole 9 yards.
Right. It's like we can't just look at the shiny exterior. We got to look under the hood, too.
Exactly. We need to make sure the engine's in good shape, that the company's finances are solid, that they're managing their money well.
And we need to make sure they've got a good driver behind the wheel.
The management team. That's huge. You want to see a team that's experienced, adaptable, and has a clear vision for the future.
It's like we're playing detective with these companies trying to uncover all their secrets.
Exactly. You got to connect the dots. Look at their financials, their management team, how they're positioned in the market. Are they innovating, staying ahead of the game?
It's a lot to consider, but it's exciting, too.
It is. It's like you said, we're uncovering hidden gems.
Right. So for our listeners out there who are ready to roll up their sleeves and dive into the world of tech stocks, what are some key takeaways we can leave them with? We've covered so much ground, from those short-term high flyers to those steady Eddie companies with their impressive moats.
I think the biggest thing is to remember that while the tech sector is all about what's new and what's next, the fundamentals of investing still apply.
Do your research.
Exactly. Don't just buy into the hype. Look beyond the headlines. Dig into those financial statements. Understand the company's business model. And most importantly, think about your own risk tolerance.
Are you looking for a quick flip, or are you in it for the long haul?
Exactly. And don't be afraid to think outside the box a little.
Yeah.
We've talked a lot about the companies leading the charge in AI, cloud computing, cybersecurity. But those are just the tip of the iceberg.
There's a whole ecosystem underneath.
Right. Think about it. As AI gets more sophisticated, what happens? It needs more processing power, which benefits companies like NVIDIA who make the chips. But what about the companies that make the cooling systems for those massive data centers? Or the software that helps those chips run more efficiently?
It's like a ripple effect. One innovation leads to another and another.
And that's where you, as a savvy investor, can really start to see those opportunities that others might miss.
It's all about connecting those dots.
Exactly.
So to wrap things up for our listeners today, the tech world is full of possibilities, some riskier than others, but always exciting.
The land of opportunity.
It really is. But remember, do your homework, think long term, and don't be afraid to chart your own course. Who knows? You might just discover the next big thing before anyone else does.
And that's what makes it all worthwhile.
Absolutely. Well said. That's all the time we have for this deep dive. Until next time, happy investing, everyone.